Okay, so we are live and people will be able to start joining us whenever they're able. And I now have some attendees, so people are already starting to come in. So we'll just, we can talk amongst ourselves or we can sit quietly for a couple of moments while people come on to this webinar. And for the folks who are joining, this will be a webinar. This will not be a meeting. So you will not be on screen. However, if you want to ask a question, you can type that into the chat. Or if you like, you can raise your hand and I will allow you to talk or elevate you to a panelist. We're going to hold the questions until after the presentations. We have an introduction from Ray and then a couple of presentations today. And so we will hold questions until after that. So everybody get comfy, grab a beverage, and we'll be starting in about 1 or 2 minutes. Thank you all.
Hey, Colleen.
Yeah.
Do me a favor. Talk to the coalition board about cannabis.
In what way?
In what way? In what way are they interested in participating in lending to we've cannabis
talked,
retailers? We've
talked around this before it was legalized, and it's such a sticky wicket. I mean, everybody's concerned about running afoul of the feds, and until that's not an issue, I'm not seeing a lot of enthusiasm.
Okay, I just need to make sure that, because I agree that that's what I heard the consensus was.
Yeah.
But I don't want to speak for the coalition. I want to make sure the coalition says, yeah, right now we probably won't lend to cannabis folks.
Right.
Which is what I need to confirm.
Yep. Okay.
Now, all your, and I know we got a minute and a hope.
Yeah.
All your members are certified by the feds and the state also, or are their CDFIs are only state certified?
That I do not know, but I can find out.
We need to find out, because those that are state certified probably okay, but I can't imagine that the CDFIs are not certified by the feds, because
I think
that's where the bulk of your finances will come from.
I was just going to say, I think that's the one that counts the most. So
right, the state. I understand. Until now, the state finance has been pretty small.
Yeah.
So but insofar as the technical assistance funding, okay, if you could put that in the things to do for me, please, I really would appreciate that.
I will. And we're already getting some feedback in the chat. We've heard from our bank lenders that if we lend on cannabis, they will withdraw their lines to us due to the feds.
Okay, so, that's good to know. I mean, look, I obviously I've been working with the Office of Cannabis Management, and I got to make sure we're clear on what the expectation is for our CDFI partners. We're not looking to endanger you guys or do something that you're not comfortable doing.
Well, that's super thoughtful.
Okay, so.
Okay. It's 12:01 and we're continuing to join in. So I'm going to give us about 1 more minute, and then I'll do our intro and welcome people, and then we'll toss to you, Ray, and then we'll get the presentation started. Again, we're just waiting. Excuse me. We're waiting for a few more people to join us. We've had a good response to this program today, and what we're going to do is we are recording this meeting. It is a webinar because we had so many people respond. I find that once you get up to 40 people or so on screen, it gets a little distracting. So this will be a webinar. However, we've already got people typing into the chat. If you have questions, please include them in the chat. And if you'd like to address a question to our panelists, just either raise your hand or let me know in the chat. And after the presentations, I can elevate you or allow you to speak, okay? So it is 12:02. I don't like to penalize the people who are on time. For the folks who are a little bit slow logging in. So we're going to get started. I am Colleen Ryan. I am the Consulting Executive Director for the New York State CDFI Coalition, and we're really glad that you could join us for our special briefing on SSBCI today. Since 1995, the New York State CDFI Coalition has been the organizer and catalyst for strategic initiatives that help CDFIs in the communities they serve. The coalition provides a collective voice, allowing our members to stay locally focused while delivering impact associated with increased scale. I hope that if you're not already a member, you will join the coalition so that we can continue to provide this valuable service to the field. Today, we are pleased to welcome Ray Salaberrios and 2 of his colleagues from Empire State Development to provide some important updates. And one of the topics today is the Capital Access Program. Capital Access has been a crucial tool for CDFI small business lenders over the past several years. It helps us build our loan loss reserves, which is a significant expense for small business lenders. The demands that these reserves put on an organization's unrestricted net assets can impede its growth and hamper its ability to deliver technical assistance to small business clients. New York State's support in securing matching dollars for loan loss reserve through the Capital Access Program was a catalyst that allowed CDFIs to help struggling small businesses. As we all know, a rule change in the later years of the program converted the state's contribution to a partially recoverable grant, requiring CDFIs to return any portion of the reserve provided by the state if it was not actually absorbed by losses. So in addition to creating a tremendous bookkeeping challenge, this reduced the benefit of the program to CDFIs. While our losses were still covered, we were no longer able to rely on those funds to build our reserves and thereby grow our lending. So we are eager to hear more about the plans for CAP, as well as the Small Business Revolving Loan Fund this afternoon. Those are the two programs that we'll have today. Next week, we'll be rejoined for a presentation on two more programs that are in the SSBCI portfolio. So with that, I hope that you will join me in welcoming Ray Salaberrios, the Senior Vice President for Small Business Capital Access within Empire State Development's Community Economic Development Department. Ray, thank you for joining us.
Thank you, Colleen, and hello to everyone. I'm very happy to be here. I'm excited about starting down this path, which I hope will be a very exciting partnership with the CDFI community. New York State has tremendous value, and we feel a tremendous amount of value in our relationship with the CDFI community. I think recently, most of you should have heard that Governor Hochul has made it a point to emphasize that of the SSBCI funding we're going to receive, at least $150 million of that capital will go right to assisting CDFIs as they put forth their programs to assist small businesses throughout the state of New York. I'm very excited about that. I think that this is something that is much needed. And what we're going to try to do is, as we go through the program, as we get the capital, we're going to make sure that we provide the capital in, let's just say, a less bureaucratic manner than you may be used to. All right, and that's just saying we're going to do our best to make sure we get the capital out to you on a very quick basis and make sure the reporting and everything we do is so that you can spend most of your time lending the capital out and less time reporting to us on what you're doing with the capital. Although we're going to require reporting, obviously, but we have a process in place now that is less arduous, and it's going to be really, really mechanized to make it easier for you to report back to us. So as you may be aware, New York State has received an allocation of $501 million of the $9.5 billion that has been allocated for the program. Additional $500 million has been allocated for technical assistance. That's to be announced at a later date. And that date seems to get pushed out later and later. We actually have a call today with the Treasury to discuss where are we with that process. And the minute we know what's going on, we're going to definitely share with you. And then we'll begin the process of talking about how we will allocate the technical assistance dollars that New York State will be receiving. So the Treasury's proposed a two-step process, right? We're going to apply, they're going to answer us, and then we'll get the money back in 3 tranches. So the idea is that all of us together have to work together to make sure that we get this money out as quickly as possible, right? So what we're going to do is we're going to work with you now, our partners, to begin setting up the process and not wait until the funds arrive to start that process. So pretty soon you'll be hearing from us, and we'll be talking about what documents need to be signed. Let's get all the bureaucratic stuff that ESD is so famous for out of the way. All right, and then let's get you all signed up. So the minute the funds come in, we're just wiring funds out. And the beauty of it is that if we have you committed to the program, it's the same thing as sending all the money out. So our plan is to get as much committed from the first tranche that we receive to our CDFI partners, so that you in turn can begin getting the money out and we can begin getting the second tranche. So we want to make sure that our process is as seamless as possible. We're going to do our best not to be bureaucratic in nature. We're going to do our best to make sure that we understand our partners have many things to do. And one of the most important things we want done is that the money that you receive from us, you're out on the streets getting it out. So with that, I will turn it over to my colleague, Wei Ming Chong, who will go over the Capital Access Program. I really want just to emphasize how much we appreciate the partnership that we have with the CDFI community. And we're going to make sure that we strengthen it and that we continue to grow the partnership as we continue down the SSBCI path. Thank you very much,
Ray. Thank you very much. We really appreciate your steadfast support and your willingness to work with us. Just before we bring on Wei Min, I just wanted to remind people, if you have questions, please drop them into the chat. So please activate your chat feature at the bottom of the screen. And if you would like to ask questions at the end of Wei Min's presentation, we'll accommodate that. And then we'll move on to Matthew's presentation, and we'll take questions at the end of that as well. So thank you very much, and welcome, Wei Min.
Hi, I am actually uploading the screen. Can you see it?
We can, Wei Min. Thank you very much.
Sorry. Okay, let me just pull
No, we
this
can.
up.
We're good.
Yep, I'm going to pull this up. 1 second. Okay, great. So thank you so much, Ray, for doing an introduction about what we are about to embark on a major project with partnership with CDFI. My name is Wei Min Trung. I'm the Senior Director for Business and Economic Development here. I work together with Matt Kennedy as well as with Ray Salaberrios, and I'm happy to present the Capital Access Program this morning. So without further ado, I am going to begin. What is the New York State Capital Access Program? I know some of you may have participated in the past, but we do have a big wide audience. So I'm going to talk specifically about CAP 2, which is the new program that you can actually sign up now and actually enroll loans. And for those who may have questions about CAP 1, perhaps they could direct those questions after the event directly to ESD. So the CAP Access Program 2.0, it began with the version 1 that I mentioned before in 2010. Now, the CAP Access Program, for those who are not familiar, it provides for a portfolio insurance to the participating lenders that sign up with the program to increase their small business lending in New York State. So how do we do that? So basically, we provide a match of a loan loss reserve to any loan that you may enroll in the program with equal match from the lender and the borrower. I'll go into more in depth in another slide. So in 2022, we expect an allocation of $27.4 million, which is a substantial increase in commitment from the state to the Capital Access Program for lenders to be incentivized to make loans to small businesses. Governor Hochul is committed to the program as well as excited about the opportunity to increase the lending for small businesses with this increase in capital access allocation. Once we hear back from the Treasury and the funds are received, we'll be able to enroll the lenders and deploy the capital to your loan loss reserve once you make the loan. So what is the benefit of a lender who is thinking about should we participate or should we not participate? There's not really any reason why you would not want to participate, and the benefits are extensive, but I'll highlight some. So the lenders, by participating in a CAP program, can build a robust loan loss reserve to leverage their current lending and future increased growth lending to community businesses. The more loan that the lender enrolls into the program, the greater the reserve grows. So losses can be covered up to 100% the total loss you may have on the loan, so long as the funds are available in your loan loss reserve. So the incentive is to really beef up the lending activity so you can cover every loan that you may have going through your portfolio that is a total loss. And it can be made whole with this loan loss reserve. So entrepreneurs can also obtain additional financing or find financing where they previously could not with this program. Small businesses can access financing to expand their businesses, their facility, their technology upgrade, dealing with some of the COVID reentry challenges, and working capital. Lenders can use the CAP program to provide for small business financing, obtain additional CRA credit, and provide larger loans if they are not typically making those loans. They could consider loans up to $500,000. Although in our experience, CAP have served businesses that are asking for funds that are probably under $50,000, but we do provide this opportunity for lender to explore a market that perhaps they like to serve businesses that are growing along with them. Also, CAP is an economic development tool that is beneficial for the state, that creates employment opportunities, and we can benefit as a whole as a community. So what kind of eligible loans? I did mention the use of the loan, but basically for CAP borrowers, we are looking for a borrower that cannot otherwise find financing options or cannot easily find sufficient bank financing to actually tap into the program. I'm not going to mention the actual law here just to save some time for questions down the road, but basically this presentation will be made available after the event, so you can actually peruse this law if you're interested in seeing exactly how it is defined. So an eligible loan could be a regular term loan that you typically make, or a line of credit that you might have been used for expansion or for contract financing or for facility or technology. You could also use the funds for your, like I said before, for working capital, startup loans, or COVID-related uses. The program loan can be made with interest rate, fees, other conditions as the lender may set, or that is typical of the loan program that the lender has set up, and the borrower would agree to it. However, each loan that is enrolled in the program is going to be tapped out at 7 years in tenure. So no loans greater than 7 years will be enrolled into this program. The maximum amount for a loan program that we can accept that I mentioned before is $500,000. However, we also want to impose that for each borrower that the maximum numbers of loans and the added total aggregate of the loan amount cannot exceed $1 million in total outstanding at any given time. CAP does not have a minimum amount. So if you have a program that serves micro businesses that have micro loan needs that are smaller, like $1,000, $2,000, $5,000, this program is great for that, as long as they can match up partially to the loan loss reserve, and the lender can also match. The enrolled program loan has to be for the entire loan amount. You cannot enroll a portion of a loan or any SBA unguaranteed portion of the loan. So the program has to be on its own. The whole entire loan has to be enrolled into the program. So another requirement that may be a little different than the CAP 1, for those who may be familiar with CAP 1, is this one. For each eligible loan, we're going to have to request that you actually fill in a checkbox for 2 of the 6 requirements below for each of the borrowers that may enroll into the program. So as long as you meet 2 out of the 6 listed here, the program loan is good to be enrolled. So don't worry if one doesn't seem like the one that your client can match, but basically just 2 out of 6. So what are the 6? So the business can and have been operating less than 5 years. So a business that has operated more than 6 years may not meet this requirement, but may meet 2 other ones listed down here. The business has not secured business financing from a bank within the last 3 years prior to the anticipated origination date of the loan, provided that the business may have access financing from a community development financial institution or other alternative lender. So just continue with the list in case there are 2 out of 6 that the borrower comes to qualify. You're moving on to the next section of the eligibility. The third one is the primary owner of the business has to have FICO score of below 700. The business is unable to provide more than 10% of the loan as collateral is another eligibility possibility. Also, we are targeting a socially and economic disadvantaged individually owned business, and we're going to acronym in SEDI. So going forth, if you hear the acronym SEDI, that's what we mean. And they have a very broad definition for the federal government, which I will go over quickly at the very end of the program, so you have an idea whether the membership base you serve, it's already a steady program. Borrower, that would be wonderful. The steady, we're going to be tracking very closely, as there is an incentive as part of the $27.4 million allocation. We have a goal to reach a certain steady goal to actually get those incentives so we can provide as much money to this program as possible. Lastly, one eligible criteria is that the business has to be located in an economic distressed neighborhood. Now for the lender, so I covered the type of loans and also the type of qualification a borrower may need to meet. A lender, in order for a lender to be eligible, we are going to see qualified lenders that may include any bank, trust company, savings bank, savings and loans association, cooperative bank chartered by the state, or any other national banking association, federal savings loan association, or federal savings bank, or any other community development lending organization. So all the members probably who are here, who are CDFI, federal credit union, a bank, a community bank, you are all a good targeted lender that would be welcome to consider this program for your borrower. The lending-based organizations such as CDFI, like I said, small business consortia, certified development companies, several other type of businesses that are listed here are welcome to consider application. Also, we would like to have lenders participate fully, and like I said, the funding commitment is so much larger than the first round. We generally would say we will cap the total allocation for CAP program for each lender up to $3 million. But it's something that if you are doing active loans and totally have a portfolio over the next 7-10 years that is robust, you can come back and we can consider potentially being able to allow you to do additional loans. The lenders can enroll for participation by completing the portfolio insurance agreement or the lender's agreement, which need to be totally signed, notarized, fully executed from the lender before the enrollment of any loan to begin for the program. The CAP manager will evaluate the participating lenders' qualifications, which we're looking for in terms of qualification, which has to be sufficient depth and commercial lending experience, financial managerial experience, operational skills, and this will be also inclusive of regulatory reports that will let you know what it is at the time of application for you to enroll as a lender. So the CAP contribution and loan loss reserve account. So we heard about who can apply as a borrower, who can apply as a lender, what benefits and what happens in the reserve account. So the Capital Access Program is a loan loss reserve matching program. So what does that mean? It means that both the borrower and the lender will combine their contribution in an amount equal to at least 3% up to 7% of the principal loan amount for each loan. Those deposits will be actually deposited into a loan loss reserve account dedicated for this program, which is separate and distinct from any of your other lending program or your operational accounts. Once you actually have the loan approved by Empire State Development or the CAP program manager, you definitely will receive the matching fund of ranging from 3 to 7%. If you match from the borrower and the lender, let's say it's 5%, we'll only be able to match whatever you contribute. Now, Empire State Development, once we match it, you will have those same match being sent to that loan loss reserve dedicated bank account that you have set up for the program. We want to emphasize that the borrower CAP contribution cannot be more than 50% of the total contribution between the borrower and the lender. However, if the borrower, you would like the borrower to have less of a burden, let's say you want to only have them to contribute only 10% of that match, the lender can raise the other 90% to match. But at any time, the borrower cannot have more than 50% of their match into that pot. We would like to encourage lenders to think about alternative matching funds if they already have a loan loss reserve for the loan program lending in general to be able to deploy this program fully successfully. Now, the contributions for these lending loan loss reserve is going to be distributed and be able to be approved a little differently than the version 1. The new program is going to emphasize that on a quarterly basis, the loan loss reserve match and contribution will be made to the lender's loan loss reserve upon approval. However, the lender will have to submit a list of the loan that they would like to enroll into the program, and basically there will be a set of documents that will be designated for enrollment that the lender must complete and gather supporting documentation and provide a list on their quarterly report narrative when they submit for payment. So instead of having pre-approval or be able to get a pre-approval prior to enrollment alone, you will rely on your commitment to the program and understanding of what the program requires and the supporting documentation required for you to provide to us for review as a batch. So basically, if you enroll 10 loans within a quarter, we expect to see 10 loans with the supporting attachment A, B, C, D, and loan closing documents. I'll walk through quickly on what those documents are, but I know that I want to reserve time for questions, so I'm going to just move on through this process right now. Okay, I already talked about lender participation. So once you decide you want to apply, you're going to review and sign the lender agreement, provide the supporting documents for the control and security account for the bank account to be set up. And once the account is set up, you can start enrolling loans. And basically, we submit the quarterly batch for review, for approval, for enrollment, and we will submit the matching funds. We also will need you to send us your W-9 and financial documentation about your finances for the corporation, for the organization. The loan enrollment, just to walk through this process more seamlessly, again, we will need for you to send for each loan to be enrolled the Appendix A, which is the loan enrollment form, and the Appendix B, which is the small business certification. Cancel. Hold on. Sorry. Oh, no. Okay. I'm sorry. Something happened to my little computer. So basically, you're going to have to fill in the attachment A, B, C, D, and be able to send those in a batch for the program to be considered. Publisher, no. No. Okay, great. I'm back. Okay. So Appendix C, sorry about that. Enrollment acknowledgement form from the funding notice for ESD to review and approve. So currently, perhaps you had to wait for ESD to give you the Appendix C as you pre-enroll. All right, I'm not sure what's happening with my computer today. I'm very sorry about that interruption. So, so basically, just to recap, you need to send in ABCD form for us to approve the enrollment. And once the enrollment is approved, basically you can have the program manager review the batch of documents. And once she or he reviews the document and it's great for enrollment, they'll send you the amount approved as wasn't signed off attachment C, which is the ESD review for approval of enrollment. So basically that is the process. I apologize, my computer is acting up, so I am not going to be able to go back to that presentation, but I will let you know that a SETI definition for coverage of the areas includes a broader explanation for people who are either limited in English proficiency or who are unable to access financing, and people who are located in census tracts that are distressed, as well as the CDFI investment area. So it's a very expensive definition, which is attached at the very last slide, which will be sent to you once this event is over. And I apologize for that technical difficulty, but I'm welcoming questions now.
Thank you, Wayman. One of the other questions, I think you've answered the question about the metrics that are being used to determine whether a community is distressed. You mentioned language barriers, but would physical disabilities also constitute a SETI?
You know what? Actually, I would say there's a very long slide with the actual inclusive definition. Would you be so kind as to review that when we send out the presentation? Because I don't have the language in front of me to be able to tell you exactly what the language says in terms of verbatim. But I would say just read that and see if what you're targeting is in there. But I think it's very inclusive.
That's great. Thank you. And then we had one more question of, do borrowers need to contribute anything to the CAP contribution?
They need to contribute up to the 50%. If the lender, well, they have to, because part of the CAP setup is the borrower has to contribute something. It could be very minimal if you want to be very minimal. That's totally fine. It could be even 1%, 2%, but basically they cannot contribute more than 50. So we don't have a minimum requirement for how much they have to. But I would say because the setup is that the borrower has to have a skin in the game too. So they need to be, putting something, but it may not be expensive if you want to be very minimal.
Okay, great. We have one more question, actually two more. They're starting to come in now. What is the timeline for this round of CAP funding?
We're waiting to hear whether that proposal is going to be approved by the federal government. We're hopefully in the next quarter we'll hear back. Once we hear back, we can then let you know that we have received approval, and we can begin looking at getting the agreements ready for you to sign. And basically, once we can get our first tranche, we can have you enroll loans and basically be able to get that done. So as long as we hear back on the allocation that is being approved, then we can let you know where we can begin signing stuff, and had to go to the board for approval. So then within the next few months, we'll find out.
When Ray had reached out to us, I think his goal was to try to get these planning sessions set up for March with the hope that we would find out about funding in April. We might not receive it, but that we would find out about it. So I think it's pretty preliminary right now, but I think the goal of ESD reaching out to us was to make sure that we were all poised to make those requests when that funding was released. Does that sound right, Wayman?
Yeah, I think that we're hopeful, like we're trying to be positive and hoping that maybe we'll hear back in the next month or two. But like Ray mentioned, it could be very well that could be potentially delayed by the Fed side. So once we hear, we'll let you know as soon as we can. But in the meantime, probably the best thing to do is to set up your organization paperwork to make sure you can actually receive these funds if you can enroll. So planning for making sure that you could identify an acceptable bank for an opening of a loan loss reserve account, making sure that you got a regulatory paperwork ready for us to review so we can enroll you, and that your status with ESD for your grants gateway or any other pending stuff you need for you to receive funds to be ready for it.
Okay. Look at that. Matt has a screen up there for a definition of SETI. We do actually have a couple more questions for Wayman before we get Matt started. So will CAP insure loans to undocumented persons?
I do not know the answer to that because that's a question posed by the federal government.
Okay. So we'll punt on that. Is the CAP program open to CDFIs who are doing non-business lending, such as CDFI credit unions and those who invest in housing?
I'm sorry, can you repeat that last question?
Sure. We talk about, SSBCI and the CAP program really serving small businesses, but would it
Mhm.
also be available for loan loss reserves for CDFIs who do non-direct business lending, such as CDFI credit unions to individuals, or CDFIs who invest in housing and community development? To cover that
No, I
loan
think
loss reserve?
CAP is dedicated to small business use only.
Well, you start with no unless you ask, right? So, does
Mhm.
CDFI need to be incorporated in New York State to be eligible for this program?
Yes.
Okay. What if we are already an approved capital access lender? Do we need to reapply?
Yes.
Okay.
So basically, it's a brand new program with different way of being, delivered. So it's a whole different program, but it's like a CAP in essence. But however, you do have to reapply. You have to, I would say not reapply. You just have to apply. Meaning like there's no continuation of the old program to be reapplying to. It's basically called CAP 2, but similar in nature. But yes, distinctive. So please apply.
Okay. I think Ray might have mentioned this, and you might not have this number at your fingertips, but can you let us know what is the total size of the CAP 2 allocation compared to CAP 1?
I think I just mentioned it on the presentation. It's 27.4 that we have allocated. I think when we did the first round, I think we were close to 7 million. That's what happened. Like, basically at the end of the program.
Okay. And I have one more question. Will ESD consider enrolling loans made in 22 that are in good standing at the time of the start of this version of CAP? So in other words, could this be retroactive to loans that were closed prior to the release of funds?
Cannot. No,
No.
we cannot do retroactive. It has to be when you sign on and you've been approved, and then you start enrolling loans. You cannot do pre-approval. We want you to have the ability to make sure that you can batch them. So this way you don't have to seek pre-approval for every loan, but we cannot enroll loans that are prior to getting approval for lending as well as us receiving funds.
Okay. So at this point, it is 12:30, and I do want to give Matt a chance to talk about the Small Business Revolving Loan Fund. If we have further questions that bubble up about CAP, we can certainly take them at the end of Matt's presentation, but I do want to give him the opportunity to take the floor and to start his presentation. So Matthew Kennedy, take it away. And thank you, Wayman, for that really in-depth and the rapid fire Q&A at the end was most impressive. So thank you very much.
Yeah, no problem. And I apologize again for that technical difficulty. I didn't want to mess with it to spend 10 minutes trying to restart it.
I think it looked worse on your end than it did on ours. So don't fret.
Okay, good.
Okay.
Good.
Thank
Okay,
you.
good.
Yeah,
Thank you.
yeah, and the SETI information I did manage to put it on the screen there from your
Yep.
presentation deck, so people did get a chance to see it.
And just
So-
before Matt gets started, sorry, for anyone who joined us late or who isn't sure what's going on, this is a webinar, so it's not a meeting. Not everybody's on the screen, just our presenters. If you have questions, please either use the Q&A feature on Zoom or the chat feature. And if you want, you can either just type them in and I will read them, or if you want to speak, I can elevate you to a panelist. So with that, Matt, take it away.
No problem. Hi, everybody. So my name is Matt Kennedy. I am from Empire State Development's Division for Small Business. I'm actually based out of the Albany office upstate in downtown Albany. So I'm going to talk about the Small Business Revolving Loan Fund Round 2. This is one of the new SSBCI programs that actually mimics one of our older programs, the Small Business Revolving Loan Fund 1, that is in the process of sunsetting, that'll be closing out. So this is going to be an all new program to replace that program. So the SBRLF 2 is a $55.5 million fund to help from SSBCI funds to help with targeted lending and programs that are going to address financing gaps facing new companies, underbanked communities, small businesses, which are more likely to be minority owned. This $55.5 million is as a comparison to the old program. The old program had about $23 million in it. So this is about twice the size of the original program. It is going to leverage non-program matching funds from participating lenders. The SBRLF 2 funds are used in a 1-to-1 ratio with non-SSBCI, non-program funds. So it's got a 50% match requirement. Essentially, you can use 50% of, if you're going to do a $100,000 loan, you can take $50,000 of SBRLF 2 money to match to another $50,000 of other funding in your organization. And this is done via loans to CDFIs, low interest loans, to provide this capital. Again, these are low interest loans. It's a 1% loan to community development or financial institutions in order to provide funding to those organizations to fund loans for small businesses located in the state of New York. This is going to primarily go to CDFIs. There may be some other organizations, there may be a credit union or community bank, depending upon the coverage of CDFIs and the people who apply. If there seems to be a gap in coverage, it's possible that there will be other institutions that are not CDFIs that are part of the program, but we anticipate that it'll primarily be CDFIs, with the only the rare probably credit union in there. The nature of this program isn't something that a typical commercial bank would use, of course. And these loans do need to be eligible businesses and eligible projects. Can't be used for ineligible projects, and we'll talk about that in just a moment. What is an eligible business? What is an eligible project for this fund? So an eligible project is a loan from a community-based lending organization to an eligible business in their service delivery area for an eligible use. That's simple. There are some ineligible projects that I do want to point out. Projects that can't be used as part of this program are projects that involve newspapers, broadcasters, providing funds directly or indirectly to for payments as distribution as a loan payment to owners, members, partners, or shareholders of a business that's related to your organization. That should go without saying that you can't do a loan for someone in your organization using these funds, of course. Any project that relates to a person who is a member of a board of a governing body, an officer, an employee, member of a loan committee, those things are fairly standard. And any other usage of funds is precluded as a result of the SSBCI program rules and terms. What I would point out there, I know at the beginning of this conversation, there was a little bit of brief conversation about cannabis. SSBCI funds, I don't believe are going to be able to be used for cannabis because it's federally excluded. These are federal funds. So for the loan parameters, a business loan to an eligible business is going to be a microloan. So these are loans anywhere from $500 up to $20 million. A regular loan, which would typically have a principal amount between $25,000 and $20 million. So there's a $20 million maximum for these loans. However, the maximum amount of funding you can use from the SSBCI funds for the Small Business Revolving Loan Fund Round 2 is $125,000. So if you were doing a $250,000 loan, you can take $125,000 from SBRLF funds, use another $125,000 from your institution from another source. If you were doing $1 million loan, you could take $125,000 of SBRLF funds, and the rest of it would have to come from another source. So historically, for the old Small Business Revolving Loan Fund loans, the average loan size was actually a little bit more than the maximum amount that was allowed for the $125,000. So there are some institutions that are doing larger loans than just the $125,000 maximum participation. Although I do anticipate that the bulk of these loans, of course, are going to be smaller loans. Most of these loans are going to be microloans. The program will provide loan terms to eligible small businesses with lengths based on each lender's individual offerings, but generally not to exceed 10 years. So you are free to choose the term that you want to use. We don't really want to see you use more than 10 years. Generally, we don't want you to exceed the 10 years. Obviously, a lot of these smaller loans are going to be shorter terms. They can be as short or as long as you choose. And before you enroll a loan, we will ask you for information. We're going to ask to review your financial products, your fee schedules, your interest rates to be charged to the borrowers. They're going to be underwritten for the proceeds from this disbursement. So that goes without saying that if we see that there's a very excessive fee or a very excessive interest rate, we might preclude you from using the funds for it. But that's going to be part of the actual application process. You'll be providing that information. There will be some sort of RFA we expect for you to apply to be part of this program. So that would be one of the things that we would collect at that time. Eligible uses of program funds will be working capital acquisition improvement of real property, acquisition of machinery and equipment. You can even refinance debt obligations, provided it's not a loan that's already in your portfolio, and that the refinance loan is going to provide a tangible benefit to the business owner. And there is a limitation as to how many refinance loans you can do based upon how much money you are allocated or you're borrowing, through the SSBCI Small Business Revolving Loan Fund Round 2 program. Credit enhancements for nonprofit lenders. This, of course, is going to specifically be for CDFIs. If you are a nonprofit lender, you have the ability to get a credit enhancement. Organization is duly organized and certified for nonprofit as a nonprofit entity, not a default of their agreement, can receive a credit enhancement, the amount equivalent to the amount of the program portion of the written off small business loan, provided the aggregate of such write-offs does not exceed 10% of the program funds used on program loans. So you can write off a loan. Let's say that you did a $250,000 loan. It was $125,000 in Small Business Revolving Loan Fund 2 funds. That loan had to be written off. You can write off the $125,000 from what you would be repaying, what you would owe on your Small Business Revolving Loan Fund 2 loan, provided that that doesn't go over the 10% maximum that you're allowed to write off of the entire portfolio or the entire amount you've borrowed. And you do have to provide ESD with documentation acceptable to us that your business, that loan has become non-collectible, and that you, to our satisfaction, have followed your established collection methods. Essentially, what we're going to be looking for there is that you've attempted to collect it, you followed your typical methods, you didn't just go to 90 days and you decided, no, we're going to write it off and move on. That you actually made an attempt to collect the funds. And we'll be collecting that information because we'll be approving these credit enhancements during the course of the program. Other requirements, monies are going to be released in tranches. They should be held in a separate program account for distribution. So we are going to release things in 3 tranches is the expectation. As you manage to loan out the initial funds, as you we'll reach a certain threshold. I'm not sure what that threshold is going to be yet, but when you reach that threshold, we'll release more funds to you. If a lender is not deploying loan funds to meet pro rata milestones, we do have the ability to reallocate unallocated funds. So if funds are allocated to one lender that's not using them, and it seems like the lender is not going to be able to use them, we reserve the right to reallocate those funds to another lender. Semi-annual reporting of the program activity and loan employment will be required. It's going to be very similar to, if you're part of any of our other programs, it's going to be very similar to our other revolving loan funds, probably with a little bit of extra information, because we are going to need to collect information on the SETI businesses, if the business is a SETI business. And again, the program loan term for these loans to CDFIs will generally be for 7 years. There could be with the potential for an extension for the full 10 years. All program loan funds should be deployed within 24 months, so you should expect to be able to deploy them within 24 months disbursement of the program loan proceeds. And just as an extra, understand that we will be marketing these programs, all of these programs. We'll be marketing these programs on our website. We'll be marketing them with flyers and events and expos. We will be promoting these programs for you and trying to direct people towards your organization. But we really would like to see that you have also been promoting the programs to drive people, to get the word out, to know that it's important that we have a partnership to get the word out as to using these funds and getting these loans done. So that primarily covers what I wanted to cover for the Small Business Revolving Loan Fund. So are there any questions about how it's going to work, or what uses of funds, or anything else?
You know what, Matt? I wanted to just highlight, which we have not mentioned. For anyone considering both of these programs, you cannot enroll a Small Business Revolving Loan Fund into a CAP program because they come from the same funding source, and we need to leverage our funding as per federal government requirements. However, the Small Business Revolving Loan Fund does allow for that repayment of up to 10% that you can write down if you do have losses on portfolio and your loans that you use small business loan fund money. So again, you cannot tap into both programs for the same loan.
Right. And in a way, you can't use both programs together, but like Wayman said, there is that credit enhancement that's built into this program as well. So there's still some protection for you, even not being able to use CAP.
We had a question in the chat, and sorry if she missed it earlier, but what is the interest rate for the small business revolving loan funds? In other words, the interest charged to the lender by ESD.
1%.
Sorry, say again?
It is 1%.
Okay.
1%.
And was there a term? Did I miss it?
It's going to be, it's 7 years as really the base term.
Okay.
With potential extensions out for another 3 out to 10 years.
So 7% at 1%.
SIP, and it's the same. Really, it's the same term, the same interest rates, the same as the old small business revolving loan fund. That hasn't changed. If you happen to be part of the old small business revolving loan fund, there's no change there. But they are 2 separate programs, so they are 2 completely separate. The one small business revolving loan fund will be closing out. Those monies will be coming back. This is a totally separate program to replace it.
And just further into the nuts and bolts, will interest payments be due quarterly on this fund?
Yes, I believe they are due quarterly. It should be the same as I believe they're due quarterly now with the small business revolving loan fund. So I believe they're going to be the same interest payments.
And go ahead, Matt.
Yeah, it should be essentially, the repayment structure should be essentially the same as the old program.
I have a question. Are there grant funds for the small business revolving loan fund? So I don't know whether that would be in addition to or a separate pool. Are there any free no pay money available for the?
It's unfortunately a lending program to the lender, so it's a loan, but you do have that 10% credit enhancement, which I would say is quasi. If you do have a loss, you're not going to lose it all.
Right, there is the 10% credit enhancement that is part of the program. It's not what I would call a grant, but it is a backstop to help ensure you have the money, you're getting that money back.
And then I was going to comment. I'm sorry, I was going to just highlight that for those lenders that do take the small business revolving loan fund dollars, we do want to encourage you to think about passing along the savings on your borrowing costs you lend to your borrowers, knowing that the interest rate is going up everywhere. And so if there was an opportunity for you, let's say, to make a loan at a much more competitive rate, the small business will encourage you to do that as part of the consideration for you to take the loan out, just because if we're lending at 1%, we're hoping that you can pass along the savings as well for the borrowers.
Well, along those lines, Wayman, this is a question that was kind of a holdover from your presentation. And I see that you had started to type an answer, but it doesn't look like you've completed it. So the question remains, will borrowers be able to keep all CAP funds like CAP 1, or will they have to return any unused portion that was not drawn down for loan losses to the state for the reasons that I mentioned at the beginning of the Zoom? Yeah,
I understand. So the CAP program is not a lending program, right? It's like a matching program, which is sort of like a grant, right? In that way that we're matching your loan loss reserve. Now, if you have a loss on your loan, it can be covered 100%. So until the program ends with the very last loan enroll, you're going to be covered 100% for whatever losses you have. However, in CAP 1, even from the very beginning, I actually looked at the very first agreement. It's basically whatever you have not used. So at the end, let's say you have $1 million loan loss reserve. You pay out the very last losses. You only had maybe $250,000 losses. There's $750,000 left over. So the state is entitled to take back the other 50% that was not utilized. But for the CAP 1, I believe that Ray has given that good news that perhaps you are able to now keep that leftover, whoever has some leftover after the very last loan is paid back, and the total portfolio principal is 0. You can keep that CAP 1 dollar. For CAP 2, we're going to reserve the right and determine it 10 years later, because nobody knows what's going to happen in 10 years. And we want to see a prioritized funding if needed. And if not, maybe if it's like something that we think is okay for us to commit the rest of the dollar for the leftover CDFI who has leftover funds from the loan loss reserve, we'll be able to consider that. But right now, the idea is for the CAP 2, we are going to ask for the money back at 50% or whatever leftover there is.
Okay. Let's go back to the Small Business Revolving Loan Fund program. Can borrowers receive money in tranches, or do they need to take in, the entire loan fund all at once?
It will be in tranches. So there will be it's going to, I'm not sure what the percentage is going to be at this moment, but there's going to be a percentage threshold that you've reached, that you have lent a certain amount of money out. Let's say your first tranche is $1 million. And once you've reached that, you've got $850,000 out in the hands of your borrowers. You got $150,000 left on hand. Then we can release the next tranche to you to go on. Yeah, it's going to be released in tranches. And from an interest perspective, it's only going to be the balance. It's not going to be the entire allocation. So it's only going to be what you actually have borrowed to that point. If you are allocated $3 million and you've only borrowed $1 million, the interest is on the $1 million. It's not on the 3. It's it's no different than any other loan from that regard.
One of the questions in the chat, or in the Q&A rather, was in the past, various state loan funds sometimes had additional conditions on use that made them hard to use. Are there any kind of hidden conditions here?
The Small Business Revolving Loan Fund was always a very open fund as far as what it was allowed to be used for. Like I said, there are those handful of types of businesses that aren't allowed to be used, like I mentioned, the newspapers and the media companies, and the borrowers that are intimately related to either the organization that's giving the loan or to government. But for the most part, it's very, very open. So there are going to be a handful of things that, because it's federal funds, that something that might be legal in New York State, like cannabis, may not be legal federally, and that's going to preclude the use of the funds for that particular purpose. But for the most part, it's going to be open. So there's nothing as far as like who the borrower is. Doesn't have to be to an MWBE. It can be to any small business. Although we are going to be collecting the information as to who the city borrowers are, who the MWBs, what groups the borrowers fit in, whether they're in the rural area, so on and so forth. That's going to be important information we're going to collect. We'll also be collecting information about jobs. Another important thing that SSBCI funds we are required to collect. If there's any job growth or how many jobs are being saved or added thanks to the loan.
Well, I was going to just only add that there will be limitations perhaps based on certifications that are required by the federal government for SSBCI funding. For example, they still have to check off and certify they're not a sex offender registered anywhere. Otherwise, they're not going to qualify for the program. They also will be asking, is this a speculative business? If there are, there are definitions for what those are. You're not going to be able to qualify for the loan if you are applying for that purpose. Also, there are some restrictions based on federal government that we have to pass down that are not ours, but we do have to have you certified. So if you're familiar with the CAP program, I know you're familiar then with these certifications because that was also on round 1. But basically, there are some changes perhaps that may not be exactly the same, but those will be the one we have to pass down. So there's nothing we can do to take it away.
And Wayman, I hate to ask you a question that we've asked several times, but
Okay.
I feel the need to ask. When will the funds for CAP 1 be released? I mean, we've been told that, yes, everything, anything that's left on the books will be, our CDFIs will be able to keep. And, obviously auditors are starting to ask questions of our CDFIs, is this real? Is this real money or is it not,
Wait a minute, can I just, hi, this is Ray Salaberrios. Can I just
Hello, Ray, welcome back.
Thank you. Just to interject for a moment. Keep in mind that CAP 1, what we're saying to you is you guys have to go through that portfolio to make sure that all your loans are covered. So the idea is that what we're saying to you is that, yes, you're going to have every loan you make since the inception of this program will be covered. So you won't be able to determine until what, 2025, I think we determined, right, Wayman, as to when the final due date will be on any loan you've made. After that time,
right. So,
after that time, those funds remain with you, but they have to be used as loan loss reserves. like the Federal Reserve, the Treasury won't allow us to just grant that money to use for other purposes. So the money's
Correct.
yours. The money's yours. We're not taking that money back to use it for something else. That money in capital in the CAP program, number one, is for the CDFIs to continue to utilize as loan loss reserve. Now, one of the things that you have to start doing is making sure that we get a up-to-date aging on where you're at with the loans that were being enrolled, so that we'll know exactly, okay, you have this left, this is what you have to keep for existing loans, and this is what you can use to enroll new loans. Is that good? Is that clear, Colleen? Does that clear it up for you?
If you don't mind, I'm going to ask Yankee Schuring, who asked the question, to I'm going to let her speak and
Okay.
see if that has cleared it for her. So Yankee, if you want to
Yeah, no,
follow.
thank you. Thank
Sure.
you, because I know this is, on the minds of many people on this call. I know, I won't name them all, it'll take too long. But Ray and Human, the question is, all the loans that we had made and that was secured by the CAP 1 program and, amazing contract, amazing program, they've all been paid off. There were a few we had to write off, ESD, approved release of funds to cover those losses. But we have quite a lot of money just sitting in a bank account. And our auditors keep asking us, they say, this is not, very good use of funds. What's happening with this? So, we sent aging reports a few times. I don't know if we should resubmit.
I think we should. I think then for those CDFIs who believe that they have every loan they enrolled covered has been paid, then we can start reusing those funds to enroll new loans. That goes without saying. But the issue we've had is that the information we've received about the agings and the bank balances has been sporadic. So I don't want to cast a wide net on everyone. So Yankee, what we'll do is I will have my folks talk to you guys directly, and to any CDFI who believes that all their loans they enrolled have been covered already or have been paid. So we can move on to the next step. We were under the impression that many CDFIs still have loans enrolled that have not been paid off totally. So if you're telling me that every loan you enrolled in the CDFI program and CAP 1, has been paid off, yeah, we should have a different conversation, obviously, because that money can be utilized to enroll new loans immediately.
Mm-hmm. Okay. So should we follow up with Morgan or do we follow up with Human? Who do we follow up with?
But for now, for the short term right now, follow up with Morgan directly. Copy me on any email you send to Morgan.
Mm-hmm.
And then we will start talking to, and any CDFI that finds itself in a similar situation where they believe that they provided all the agings and all the bank statements, and we had some issues reconciled with a few CDFIs. If you believe that that's not the case for your CDFI, and that you're 100% positive that every loan you enrolled has matured, or you have a good sense of what exactly has matured.
They've all been paid off.
Okay, good. That's good for you. That's
okay,
good for
thank you.
you.
No, this is great. Thank you.
All right. All right.
Okay.
I have one more question, and I'm cognizant of the time. It's 12:56. Thanks, Ray, for coming back on that. This is obviously a burning issue for a lot of us. I have one more question, and then I think we'll be wrapping it up. Before we take that last question, I want to thank everybody for joining us. Next week, please come back. I believe we'll be talking about the contractor financing program and the capital project loan fund. Does that sound right? And will it be Matt and Wayman again, or will we have a new cast of characters?
It's going to either be Matt, Wayman, and Ray, or
Okay.
yeah, a combination.
All right, great. Well, I have one more question regarding both programs that we discussed today. So to confirm, for both CAP and the Small Business Revolving Loan Fund, a lender applies to the program and has approved a certain initial amount that can be drawn down on a quarterly basis when they submit specific loans to be approved by ESD. Is that the correct protocol for that?
Let me just answer for CAP, because CAP is different than Small Business Revolving Loan Fund. On Small Business Revolving Loan Fund, Matt can give you again the tranches and what percentage completion for the first tranche before drawdown for the second one. But for CAP, you're not going to be assigned a number or tranche or anything like that. So for CAP, it's going to be basically a lender signs on to the program. They get approved for enrollment. So they will start enrolling loans, given all the documentation they are required to gather a submission. After 90 days, they have gathered all the documents, all the transactions. They're sending for the program manager to review. The program manager review all the documents, making sure they were the ones that actually substantiate that the money has been deposited for the borrower and the lender's contribution, that the loan has been closed, and the eligible use is actually for what it said it's going to be for. That will be demonstrated from the exhibit ABCD that you're going to submit. And then the program manager is going to review those and then send you back and say, affirmative, I will sign off on exhibit C, which I believe is the one that says lender approve this, and this loan of $10,000 has been enrolled, and the contribution of $5,000, if it's 5%, is going to be put for you to receive that money, and we'll process that request for payment, and you get a whole the whole batch process. And if you do not receive the approval from the program manager saying this is appropriate after all the review, then that loan will not be enrolled. So we are counting on you to do your job to know that the program requires the substantiation documentation, and they're not rectify within 2 weeks after quarterly is submitted. It's not going to be enrolled in the program at all. So basically, please make sure you understand the process for enrollment of the loan and what documentation is needed. And if you need someone to go over the first 2 transactions with you before 90 days is up for the enroll lender, the program manager can do that with you. So you can send a sample. You have one loan you want to enroll. These are the documents submitted. These are the form you completed. Is this correct? Is this what I have to do for every single one? The program manager will be able to walk you through that, and that will be why by the time 90 days is over, you're going to be sending a complete set without problem.
Great. Anything to add on that, Matt, or should people refer back to the
Or
when I send them around next week?
For the small business revolving loan fund, it'll be part of the loan agreement. So what it'll be, there'll be an exhibit. Like, let's say you'll get your initial tranche, upon completion of your closing paperwork, and then there'll be an exhibit that's going to be part of the loan agreement that as soon as you've reached the threshold to release your next tranche, you'll submit the lender will request it. You'll request the tranche, and then we'll either be able to tell that you've reached that threshold either by your reporting previously, or let's say your previous reporting. Let's if the goal were say $750,000, and your previous reporting showed that you had $600,000 in loans, you would just send us something showing that you had that last $150,000 committed, and then that would be enough to release it, and then we would release the tranche. And all that's going to happen really with the exhibit is going to be confirmation that you're requesting the money, and confirmation of where the money needs to be deposited. So we'll, the ACH information once again to make sure that it's going to the right place. And then it gets submitted. It gets submitted for funding. It goes through the signature process at ESD, and gets submitted for funding, and then ESD transfers the next tranche of the loan, sort of the next segment of the loan.
Okay. All right. Well, it is 1 o'clock. We're starting to have people drop off because I know everyone's busy. I really want to offer my sincere thanks to Ray and to Matt and to Wei Min for sharing this expertise with us. So many questions. Obviously, these are super important programs for New York State CDFIs and for helping small businesses. So we will look forward to seeing you again next week for the contractor financing program and capital project loan fund. I will share the recording of this presentation as well as the 2 PowerPoint decks early next week. If you have any questions, by all means, get back to me. It's Colleen@nyscdfi.org. Thank you very much for your support, and thank you for all your hard work in the community. Have a great weekend.
Thank you.
Thanks.
So long.